Inflation strikes back, or maybe it never went away. We'll talk about that in just a moment. Hey, friends, Adam Hammer here, Chief Investment Officer of Hammer Financial Group in beautiful Lockport, New York, and Myrtle Beach, South Carolina. All right, so last Wednesday, April 10th, a report came out, the CPI report, which is a measure of inflation. Inflation is the prices of goods and services in this country. And the CPI report came in hotter than expected. It came in higher than expected. And that led to a temporary short-term sell-off in the stock market and fears that inflation is back. So here's the deal with inflation. The reality is that it is sticky. Prices have not come back down from where they were a couple of years ago. You've all seen this in your own lives at the grocery store, gas prices, car prices, housing prices, airline prices, rents. Everything is just more expensive than it used to be. And it looks like it's going to remain that way. There's good and bad news with inflation. The good news is that if you look at longer term trends of inflation, the long-term inflation numbers are coming down, but that's not necessarily a help to everyone right now because short-term prices are going to stay higher than they were, and they are sticky. And we probably won't have relief from higher prices probably until 2025, 2026 and beyond. So there's the good news and the bad news with inflation. With that said, how about the stock market and investors? How did they sort of dealt with this higher inflation report? Well, I'm going to share my screen with you and show you two quick things that I think will be of interest for you. This up on your screen is known as the VIX, V-I-X, VIX. You don't really need to know how it's calculated or what exactly it all means. Just know that it represents fear in the market. It's the fear index. And typically, based on history, when the VIX goes above 20, that's a very bearish sign. When we go to 20, 21, 22, 25, 30, that's selling is ahead. That's usually a rising VIX means the market is falling, there's selling taking place, there's kind of a panic almost in the market with selling. So right now we're at about 18.7. We did spike a little bit. We're coming back down, which is good. But again, 20 is kind of a key number to look at to see, okay, is the market going to downturn here, or whether we're going to continue to sort of resume the bull market. The VIX is an important indicator to look at, and 20 is that kind of number to concern yourself with. Right now we're at 18, so we will certainly keep an eye on that. The other thing is to watch the NASDAQ. Now, the NASDAQ is an index that has a lot of growth companies, a lot of tech companies. And so if we were going to have a really big sell-off in the market, you would probably have the NASDAQ taking it on the chin and really having a downward movement. But if you look at the last month for the NASDAQ, we're only down about 1.38%, which really isn't much at all. The NASDAQ and the tech sector has held up pretty well. So that's an encouraging thing, despite the inflation report that we had last week. So those are the two indicators to look at: the VIX, the NASDAQ. So far, as of the time of this recording, things are okay. Of course, market conditions can always change, and Paul and I will certainly be attuned to that. Last thing before I let you go, if you found this video of interest, you can find all of our videos on paulhammerfinancial.com. Go to resources, our insights. Here's our video. A number of people have been asking us about estate planning. Here's that video that you could watch that. And really all of our videos from the past are on here. And if we can ever be of service to you, just press this pink button. It'll take you to our contact page. And you just fill out some information. First name, last name, email, phone number, and Paul and I will be back in touch with you very shortly. So hopefully you found this video interesting, informative. Thank you so much for watching, and I will see you on another video. Take care. Bye-bye.